Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by Craig Yeoman, manager of the Saracen Growth Alpha Fund. Hello.
Morning, Emma.
So your fund at the moment is predominantly invested in small growth style stocks that have done incredibly well over the last 4 years. However, we have started to see a resurgence in value orientated stocks taking over in 2016. You are an all cap manager. Do you see yourself repositioning the fund to take advantage of that?
No, I don't actually. As you say, I am an all-cap manager. At present, I have 17% in large cap, with the remaining 83% in small and mid-cap. You're right in saying there has been a move more towards value, but actually, we think much of this is because of the dreaded word that we're hearing at the moment, which is Brexit. So many companies that we're invested in are underperforming. That, however, gives me the opportunity to top up the holdings because I run a concentrated fund. We will invest between 30 and 45 stocks in any one point in time, and at present we only hold 30. So I'm very happy with the stocks that we hold. So rather than move the fund more towards value, we will continue to invest where we are and actually top up the positions.
And when you took over the fund, it was much more sort of across the cap scale, wasn't it? I think you said earlier 55% in larger caps.
It was.
And why do you find this small cap space so compelling then?
Well, the reason is these companies can grow quicker than the multinationals. And if you actually look at the FTSE 100, it's not a very good indication of where the economy is at. It's dominated by financials, it's dominated by oil and commodity stocks. If we look further down the market cap scale, and the companies I'm invested in tend to be overlooked by the market, then we see quicker growth. We see margins that are stable and can actually grow. If you look at the FTSE 100, many of these companies are under pressure, both from a margin and a turnover point of view.
And what sectors are you seeing those opportunities then? You mentioned you're avoiding financials and miners, which make up a lot of the FTSE 100, but smaller down the cap scale, what sort of sectors are interesting?
Well, actually, we're still seeing a lot of value in house builders, which may come as a surprise. But if you look at the margins that these companies are earning, they're actually material. So, for example, my largest holding, a company called MJ Gleeson, that's earning 18% operating margins in their housing division. If you look further down, we can talk about industrials. Now, industrials is not an area that's doing particularly well, but of course is made up from a number of different companies. So the companies that we're investing in, which could include Avon Rubber, for example, could include Hill & Smith, they're still earning double-digit margins and actually being able to grow that margin.
And you mentioned the dreaded word Brexit earlier. Yesterday, in a leading national newspaper, 300 business leaders put their name behind the Vote Leave campaign. And they were predominantly small and medium-sized businesses who said that they were being strangled by the red tape of the EU. You invest, obviously, in small and medium-sized businesses. Is Brexit, or indeed the EU, something that you consider when making those business decisions?
No, it's not something that I consider. But I think you're right in saying that it is potentially a large impact for small and mid-cap companies because there's a lot of red tape there. Now, if you're a multinational company, you have advisors everywhere, and you know it's easier to navigate. For small and mid-cap, it's not quite as easy. But coming back to the beginning of the conversation, a lot of my stocks, which are domestic stocks, have been hit on sentiment. So this has given me the opportunity, as bizarre as it may sound, to actually top up my holdings because they are being impacted by a potential vote leave. And although we don't think it's going to happen, you know, the market is obviously nervous. There's a lot of cash sitting on the sidelines, and people aren't willing to actually commit.
And so when the market reverts to norm following whatever result we get after June the 23rd, you're confident that those stock prices will rise again?
I'm very confident the stock prices will rise. And you know, we can talk about a number of stocks that I own, but the house builders, for example, have been hit very hard. The retailers have been hit hard, and we're taking this opportunity to actually top up the positions.
Craig, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.